Welcome to this video. In this video, I'm going to be making a stock analysis of Symbotic Incorporated. If you like this video, please don't forget to leave a like and subscribe. And of course, remember this isn't financial advice. This is purely for entertainment and educational purposes. Now, what does Symbotic make? We'll make autonomous factories, and by that I mean warehouses. So say you have a warehouse and you need to ship a ton of stuff, but it has to be on pallets and it is 10 different products. Well, then you can buy a Symbotic system, which means you basically can fire everybody that works in your warehouse and they're going to pack the pallets for you. You can maybe fire 80 to 90%, so you can just load it onto small little trucks and drive it out to your proper trucks, which is quite interesting because we are going to see more and more warehouses being what is called blackout warehouses. We see that a lot in China where nobody even operates it, but people just go over there, grab it, put it in a truck, drive away. And so we're going to see that in the United States as well in the future. And I think Symbotic is a great bet for that. So every one of these huge companies that has a ton of products and they want to ship them out to their wholesalers, well, Symbotic is a great bet because they just make autonomous factories. Now let's get to the stock. As you can see right here, the graph currently is quite nice. We're laying on the previous support levels right here, as you can see. So if we break through this, it's going to be quite nice. And as you can see up here, we're going to see a bit of resistance. As you can see, we have a bit of a rough patch down, but it is increasing again, which is a great thing to see because most often when we hit a support level, it's going to meet a bit of resistance. As you can see, chance if it breaks through up here, then we basically can just improve. And we have some peaks up here, but if it breaks through 63 here, we really have nothing else, and it has reached a new high, which is quite cool. Now the beta in this stock is quite high, and if you don't know what the beta is, that is how volatile a stock is. And this is 270% more volatile than the average index, which is at 1. Now the RSI as well of this stock has been quite decent this year, at least for the past, what is that, since April. As you can see, we've been trading in the upper RSI. Now if you don't know what the RSI is, that is the relative strength index. So something that's between 70 and 50, the stock is moving upwards, and if it's above 70, it's overbought, meaning it's rising rapidly, and the same is true the other way around. As you can see, if it's below 50 and above 30, it's moving downwards, and it's below 30, it's falling quite rapidly. As you can see right here, this huge stock fall, and it is oversold down here in the RSI. Now, as you can see in the earnings, it's a bit good and a bit bad. As you can see, they missed it by 48%, beat it by 30%, missed by 5%, and beat it again by 40%. So a bit all over the place. So I do think they could guide a bit better than that. I don't think it's great when companies miss or beat them by so much and so different things every single time. But I don't pay out in dividends, of course. And that's because they don't make any money yet. As you can see, the net income was just below 1%, and as you can see, overall, it has been negative the past 4 years. But it's a relatively new company, so that makes sense. But as you can see here, how they make the money by far the bulk of it is the systems, and the systems at the factory itself, where they go in and install all the machinery that needs to be automated. And as you can see, then they have operation services, which is of course when they need to be repaired, and then they have software maintenance and support, of course, because you need software for your services. As you can see here, they are only in the United States at the moment. Canada is so small we can't even see it on this graph, but it's cool that they are increasing into Canada and hopefully also Mexico and maybe even Europe in the future. Now the performance of this stock is a bit all over the place. As you can see, some years it's 300%, some years it's minus 50%, but then again, it is quite a new stock, so of course, that is to be expected, as we were first publicly traded in 2021. Now, as you can see here, the technicals for the day, it's a buy, and for the month, it is a strong buy, which shouldn't surprise you, because ever since April, as you can see, it has had a quite nice ride upwards, which is very lovely to see. Now the analyst rating on this are a bit all over the place. We have 7 strong buy, 1 buy, 9 hold, and 1 strong sell. This strong sell, given the fact that everyone else has so great ratings on it, is quite interesting because either this guy has figured out or he is really wrong. But overall, 18 analyst rating on such a small company is quite interesting because this means that they are onto something. Now, is it priced correctly? I do think it is. I think it's going to stay around this, maybe a bit up and down the next year or so, because I do think it has also risen quite rapidly in price. Now, as you can see, the average is down by 26%. This is unrealistic to me. I think it is going to be between this and the max here. I do think it's going to trade between that because the technology in itself is needed in the future. So I do think we are going to see some of that in the future. As you can see, the EPS is also estimated to grow quite rapidly in from 2028, which is nice to see. And as well as the revenue, as you can see, they're just slowly increasing that more and more. And I can't wait to see the first year they may generate a profit, which is going to be lovely to see. If you did like this video, please don't forget to leave a like and subscribe. And if you want to see more videos like this, please leave the company comments analyzed in the comment section below.